I think that we're going to see a proliferation of applications that are on-chain that offer the same user experience and utility that we have from existing centralized platforms. And I think it'll be the year that we shift away from the majority of activity happens inside of centralized platforms. The majority of crypto transactions happen on Binance, on Coinbase, et cetera. And we shift out into the majority of transactions happen on chain in open on-chain platforms.
I think there's also a very high chance that 2025 will be the start of the market shift toward a new bear market. I hope it will be later in this year, but I think there's a very high chance we shift the market dynamic to something that is more flat or downturn during the year 2025. So it's going to be a great year, but probably at some point of the year, we're going to change the paradigm in terms of the actuality of the market.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. We are now featuring quotes from listeners on the show. Today, we have one from Lawrence Grigg on X, who responded to Shaw Walter's comments that universal basic income won't work and that we need to build a technology to enable a non-governmental form of UBI so people have time to do things that they really want to do. The examples he gave were things like focusing on family and pursuing creative passions. Lawrence wrote, quote, "I'm of a different opinion. Once there's no need for money, most people will be doing nothing and be complaining about it. Drug and alcohol abuse will reach epic levels. Humans are imperfect creatures that need the struggle of everyday life for meaning." To have your comment featured, write a review of the podcast overall on Apple Podcasts or Spotify, or leave a comment on the episode on YouTube or X. This is the January 7th, 2025 episode of Unchained. Did you know the Stellar blockchain already powers over 550 million tokenized assets in 180 countries? Join the Build Better movement at betteron.stellar.org. Polkadot is the original and leading Layer 0 blockchain with over 2,000 plus developers. And the Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem, making it faster, more secure, and adaptable. Perfect for GameFi and DeFi to build, grow, and scale. Join the community at polkadot.network/ecosystem/community. Robinhood Wallet, Robinhood's DeFi mobile app, takes no fees on same-chain and cross-chain swaps. Use Arbitrum's Layer 2 to swap with low network fees in just a few taps. Other fees may apply. Download on iOS or Android today. Did you know High Growth Vault, aka High Gain, by Kelp, offers over 20+% reward rates on ETH by leveraging blue chip DeFi strategies? Maximize your rewards with professional risk management. Get some of the highest rewards on ETH. Visit www.kelpdao.xyz. Today's topic is what's in store for crypto in 2025. Plus, what's all this drama in Ethereum about? Here to discuss are Marc Zeller, founder of the Aave-Chan initiative, and Kain Warwick, founder of Infinex. Welcome, Marc and Kain.
Thanks for having us.
Yeah, very glad to be invited.
So 2024 was a historic year in crypto, in my opinion. It seems the crypto industry really put the FTX collapse and fallout behind it and finally entered on a path I think it should have been on for a while if it had not been irrationally politicized. But anyway, let's not talk about regulatory or political things because we've covered that a lot. So aside from political achievements, what is your top takeaway for crypto from 2024? And Kain, why don't we start with you?
Sure. I think probably the top takeaway for me is the white swan of the, and again, not to focus on the politics of it, right? But like the kind of white swan of the entire crypto ecosystem almost. Uniting around this kind of political goal of defeating their enemies, essentially, right? We'd had 2 years of like very, very adversarial regulatory environment. And finally, we had a sort of catalyst that I think was enough to get everyone in crypto to realize that there was an opportunity to, really push hard and kind of take it to the polls and win. And I think that, when you look at the result, even down ballot, right, the result was very, very good. And so I think that ability to coordinate, which we all know that crypto has, but we maybe hadn't shown it on like a global stage yet, was our biggest achievement by far.
I think we can go deeper on that point in the sense that I think 2024 was a turning point in the fact that when you do politics, and I know we don't have to go too much deeper on that topic, you cannot ignore crypto as an industry anymore. And I think a large part of this election at the end of 2024 was about that some part of the political spectrum has been extremely aggressive toward crypto for the 2 previous years, with things like Operation Chokepoint 2.0, with part of the party that were building anti-crypto army and this kind of stuff. And when you have a noticeable amount of the population that do have crypto as part of their portfolio, it's generally something that will cause a backlash to be against the industry. And I think people have took notes across the globe around that fact that you cannot ignore or be completely outside the crypto industry anymore, because it's not just a bunch of degen gambling in their mom basement anymore, but it's an actual industry and you have to deal with it as one of the part of finance. And I think it's a big win that it became something that is clear in 2024. And we are going forward in 2025 with these facts that crypto has to evolve with this new paradigm.
Yeah. And it looks like, some of the, I guess you could say, optimism or just the change in outlook, I think, has really supercharged the market. But then also, I feel like it has caused the brakes to be released on a lot of innovation. So let's actually now talk about a huge, exciting trend that took off near the end of the year. We saw Truth Terminal kind of be the initial AI agent that really caught people's imagination. And then as the year closed out, AI 16Z, AI XBT, other AI agents were taking off. Also, there's now these platforms to create AI agents. And so as you're watching all this play out, what are your thoughts and where do you think this AI agent trend will go in 2025?
My vision of the topic is that, like every new industry, there's 99% bullshit and 1% innovation. And I think it's even more highlight is this new vector of the industry. 99% of what we see up there is basically ChatGPT wrapper of low quality that will pre-compile like a Twitter feed and allow opinion leaders to have more impact and generate more engagement out there. But that will be a lazy analysis to stop there, in my opinion. I think we are assisting to a paradigm shift in how we organize the public discourse using AI to supercharge this interaction. We are seeing as well the integration of more and more AI agents doing things on chain. And that's very exciting to me, but also very frightening to me, because risk management is a lot of things that I do day to day, operating and participating to a decentralized autonomous organization that has so much money in it. And there's a lot of innovation to go there. And to say my opinion, just to finish on this, is I think it's a lot value additive to the ecosystem that, for example, just low quality NFTs or meme coins. At least we are building something, and that's really innovation. So that's quite interesting to me.
And wait, just to understand, you feel like the AI agents could increase risk in a system like Aave? Is that what you're saying? And how so?
I would not delegate the risk parameter of the Aave protocol to AI agents without any supervision. Because if you try to do that, you will probably break a few
but
eggs.
Someone will. Someone will
will.
fork Aave and put an AI agent in charge of it. AI Mark Zeller is coming for sure.
I mean, we have multiple instances, so we can do an AI operated instance of Aave, but I will not put my own money on it, to be honest.
But like the way that you initially phrased it, I thought you were saying that you felt like the presence of AI agents transacting on chain would somehow change the way you value or the way that you assess risk in the system, or is that not what you were saying?
I think it's interesting when you do risk management analysis. Obviously, that's not my direct job because at Aave, I lead growth and governance coordination. And we have two very incredible risk teams at Aave working on this. That's Chaos Lab and Llama Risk. And when they do qualitative and quantitative analysis of the market, the reaction of the market agents are extremely important. And I think there's still, in 2025, even it's an order of magnitude better than what we had in the DeFi summer 2022, 2020 till to 2022, is there's still a lot of inefficiency in the market. Arbitrage, carry trade that have not taken because there's a lot of things that are still manual in our market. And if you have more and more automated agents that identifies those arbitrage and those on-chain opportunities and take them, you will have less volatility on the market, especially in our core business, which is like the interest rate curves. And why do you pay, for example, 14% to borrow USDC on Arbitrum and maybe only 9% on Base? That's when all things equal. All things never equal, but there's a lot of inefficiency like that in the market. And I think more automation will reduce those inefficiency. And that's quite interesting when you look at the market as a whole.
Okay, so actually it seems like then it does decrease risk?
Well, it depends.
I feel like it's short term, right? Like short term, you have a whole bunch of models that make assumptions about the actors and agents in a system. And if you replace the manual agents, i.e. people, and the bots, the automated agents, with a different type of automated agent that's now powered by like a different type of logic that could go wrong in different ways, your models will be out of date for a while, right? So like, I think that's where like it could potentially introduce more risk, but you know, LLMs, I would imagine, will act just like automated bots, but maybe with slightly more sophistication. I think the interesting story for me though is like, what I love about crypto is lowering barriers to entry. Right. So back in the day, it used to be hard to launch a token. You used to have to be kind of a bit technically sophisticated, right? And then we got better and better tools, and it finally like sort of culminated in Pump Fun, which was like the easiest, simplest way to launch a token, right? Like, and you know, even Solana, when I first did my Solana meme coin back in late 2023, it was not easy. Like it took me a little while. It took me like a week to like work out how to launch a token. And then like 6 months later, it was like, you just click a button, it's done. So lowering barriers to entry, I think is kind of the interesting thing about this. And I think that what the AI agents do is lower barriers to entry of not just launching a token, but then following it up with like content, right? And getting attention, and like attention is the game, right? And so not only can you launch a token, but you can actually generate attention for the token without even doing anything. You just click a button and it's kind of done. So, you know, we went from like the, you know, truth terminal, whether you believe it's a human typing it or an LLM doesn't really matter, to like now virtuals is like Pump Fun for AI agents. You just click a button and now you know, so it's pretty crazy when we think about how fast these barriers are falling. I guess the more interesting thing to me from a market dynamic though is like when you lower barriers to entry, the opportunity changes, right? So like the differentiation point shifts to something else, which is still hard. And I think that right now, launching an AI agent is super easy. Launching a token is super easy. Finding ways to differentiate it is still hard. That's still the challenging thing that LLMs haven't solved yet. But you know, they might solve it next week, and then we'll be on to something else.
Yeah. Well, one other thought that I was having looking at this AI agent trend was that to me, it looks like even more disruption is coming for venture capital because it's just like you were saying that you could just launch something. But I have seen people talking about this on Twitter, and some people are saying, oh, but VCs allow you to have that differentiator because they're sort of like creating signal out of the noise. So I wondered, if you thought that AI agents were going to have some impact on VC in either a negative or positive way.
I mean, I think you could replace Kyle Samani with an LLM pretty quickly, right? We're almost there. The technology is almost ready. So, we're not that far off. We're not that
wait. Do you just mean his presence on X, or do you mean...
Yeah, his presence on X. I mean, his presence, which is like most of the thing, right? Like, it's an attention game, right? It's about curating deal flow and getting into the best deals. So once you've got attention, like, it's not hard to see an AI agent on X getting a bunch of attention and therefore getting deal flow. And once it gets deal flow begets deal flow. Like, you could see an AI agent that could be a very good VC. It could be terminally online in a way that, like, myself and Kyle and Marc could never possibly manage, right?
Right, but it wouldn't be able to develop human relationships that, I don't know exactly.
That might be a feature. I don't know. That might be a feature. It's not going to be. It's just going to be getting attention on X all the time.
I think if you add a layer on top of that, to imagine an agent running an echo group or Lattian account, and like, to me, as a founder and as a member of this industry for the past 10 years, I see less and less added value to have any VC in our ecosystem, because we reach a point where the market is mature enough to have actual users. It's not betting on the infrastructure that might work in 3 to 5 years. We are an industry that has application that makes money today. And the reality is that as a founder, I don't need any funding for the ACI because I'm lucky enough to not need it. But if I needed to raise, I would go to Echo and raise to 200, 250 DeFi OG and actual users. And instead of having one VC, I will have my 200 first power user that will bring my first 20 to 50 million TVL in my protocol, and I will go from there. And I don't see any reason why I should take any money from Paradigm, A16Z, or the old guys, because it doesn't make sense to me. And if my group leader is an AI that will tweet about me 20 times a day, and I have 200 crazy DeFi OGs that actually use my protocol, how can A16Z compete with that?
I mean, the ideal there is that the AI agent running the Echo group has only other AI agents in the group. And they're actually tweeting 10 times a day. You don't need people at all, right? You just have AI agents that's curating the agents.
Well, it's so funny. Yeah, because my next question was going to be about the fact that there are now these, platforms like Echo, Legion, Biddlepad is another one. And we saw Mega ETH, that first offering on Echo, it just sold out in less than a minute. It was oversubscribed. Hyperliquid obviously was a huge successful launch in the fall, no funding from VCs. So I just wondered, like, generally in 2025, do you feel like we're going to see some renaissance in kind of, something more like a typical ICO crowdfunded model, obviously improved from 2017?
I think it makes sense because ICO were the right path. I think it should make sense to raise on-chain when you are an on-chain application. The issue with ICO back then was the lack of actual use case in the ecosystem, because back in 2017, during the ICO era, you were raising based on the PDF. And even today, most of the time, you send a PDF, a deck to some VC, and you hope that something will happen.
Yeah, the white paper.
The white paper. And but right now, you don't raise on the 3 to 5 years, something that will happen to you in 3 to 5 years. you raise about something that probably already has an MVP on there. You have some smart contract around, you have some TVL that already is going into your ecosystem. It doesn't exist, like raising from scratch, like just based on an ID doesn't exist anymore in our ecosystem. On the application side of things, obviously there's still infrastructure and long-term project in the ecosystem, but I'm talking the application side of things. And in that case, I don't see any added value anymore on VCs in our ecosystem.
Interesting.
I think like the Echo, the reason why I like Echo over a straight ICO, right, is it's an evolution of the incentive mechanism, right? Like the mechanism design is actually better. So there are, there were always people curating deals, even in the ICO era, right? You had, the crypto Lark and, Ian Bellina and people like that were curating ICOs, right? But the incentives were all wrong because they were basically paid to shill these ICOs and pump them up. And, it just was a race to the bottom, right? With Echo, the way that group leads are set up, the incentives are much more aligned. Right. And as a group lead, you want to curate better deals because you want to have the best group, and you will only keep the best group if, you keep providing good deals. And so there's a very powerful feedback loop there where like the best groups get the best deals, have the best group members. To Marc's point, you want the first 250 users who are going to give you your first 50 mil of TVL. That only works if you have good users in the group and you're bringing good deals. And that means you have to work hard. You have to be aligned. You have to put your own money into the deal to make sure there's skin in the game. There's a whole bunch of incentive structures there to ensure that there's alignment and positive feedback loops. Of course, there's edges to that, right? And there's people that are, running groups where they're putting in very small checks, $100 or something like that, and then trying to farm as many deals as possible. But those groups, I think, will fall apart very quickly. So, versus pure ICOs, I think Echo is a better model. Obviously, there's a trade-off. There's KYC. It's a closed system. It's not an open permissionless system. But I do think it is a significant improvement over some of the issues that you saw in ICOs.
Yeah, I feel like what we've seen over and over again in crypto is that, there was this promise that the incentives help align the users and the founders and blah, blah, blah. And instead, what we've seen is this kind of mercenary model where people yield farm, they get the airdrop, then they move on. And, and it's just creating this like roving mass of people who are just using you for the money and then dumping your project. So maybe this would be, a time when that shifts and people kind of stay in it for the long term. I did want to ask though, while we are talking about VCs sort of getting cut out, the meme coin trend was another example of that. And I wondered, where you thought that trend was going to go. Obviously, Pumped Up Fund had this incredibly successful year, was, bringing in a ton of money. But, do you feel like they can sustain this success and meme coins generally can sustain this momentum?
We always had in the financial history some demand for speculation based on no fundamentals. Like it's not something new. It's not something that happened in crypto. Like high volatility is attractive to some investors. And when you have zero fundamental, you have no limit to the volatility. So I think it's here to stay as a part of the industry. But if you look, I think what is interesting when you look at an industry is to take a step back and see the evolution of things. And 99% of the industry, Bitcoin includes, in the 15 years ago, we only had Bitcoin, but everything was a meme coin because the technology was just starting and the use case were almost zero. But as we move forward in time, we have more and more actual fundamentals. We have more and more actual users, actual use case, actual real on-chain economic activity that happens. When you look at Sky, they actually make money running their protocol, and they make a lot of it. When you look at all these protocols, they are actually reaching the critical mass of an industry that has sustenance and substance. And I think over time, the part and the percentage of no fundamental investing over fundamental investing will change towards the actual real economic part of our industry. So meme coins are here to stay, but I don't think it will grow in terms of market share in our industry.
One of my favorite comments on this is from Matt Levine, who has gone through this like very interesting arc, right? Of like, from the early days of GameStop being like, if this is still going on in 20 weeks, I'm going to be worried, right? Like, and then, like 200 weeks later, it's still happening. And he got to the point, I think a few months ago, where he was like, maybe this idea of fundamentals was itself a meme that's kind of run its course, right? Like, from like the 20s, basically this introduction of like fundamental analysis and discounted cash flows and all of these, ways of like assessing a business. Prior to that, it was just like number go up, volatility, bucket shops, whatever. And we've sort of returned to like the natural state of the world on some level, right? So, it's a very nihilistic take on the evolution of finance, that like this period in like the, 20th century was a blip where we all convinced ourselves that you could work out what something was worth, and really it was just worth whatever someone's willing to pay.
I would say I'm not not nihilistic then.
I actually feel like it's really just I feel like our whole society is becoming more gamified. And, Robinhood was the first financial app to tap into that. But I actually feel like in that way, it almost like shaped a new generation of investors or something. And, it just sort of like changed, as millennials just keep getting older and becoming more of the market. I feel like we're just going to see more and more of that behavior. And so I agree, like, the sort of meme of fundamentals is like going out the window, and this new person who's kind of grown up in a new era. And, I mean, it's very similar to what happened with Silicon Valley Bank, where that notion of a bank run that you could just do while you're like, sitting in
on your app,
right? In a cafe.
You don't even need to go
and
line up. Yeah,
exactly. Yeah. It's just something that, is more of a generational shift. All right. So it took us a bit longer to get to what, to my mind, was the one of the biggest stories of the year. But as we know, Solana had a huge year, and it bested Ethereum on multiple metrics, including obviously price. But meme coins, as we mentioned, was one of the biggest trends, and that Solana was the home to that. It also actually attracted more new developers to crypto than Ethereum. It looks like it's becoming a home base for the AI agent trend. AI 16Z is using it. People are saying that DePIN is going to emerge in a bigger way, and that's really more of a Solana thing. And I wondered, where do you think things are going when it comes to this sort of like rivalry between Solana and Ethereum? Do you feel like it's just going to keep, eating in Ethereum's lunch when it comes to these more cutting edge crypto trends? There's a lot of kind of takes on the two theses of the two chains, the modular thesis versus the monolithic or integrated architecture of Solana. And I wondered if you thought they're just going to become differentiated, or if it's really that Solana is going to continue to steal Ethereum's thunder.
That's a very interesting conversation too, because I think the industry is evolving to have multiple areas where it can shine, and it will happen and express in different chains, because everything you said is true and is very verifiable by facts. But also from my point of view, and on the DeFi and especially lending market, Solana is not taking significant market share of our business. And I'm a businessman. I'm not a cultist. I'm here to make the Aave-DAO rich. That's why I wake up every morning and I work every day and build some AAP, because I want to increase the Aave-DAO bottom line, because I'm paid for that. So if Solana was a profitable endeavor for the Aave protocol, I will publish tomorrow, or even today, on the Aave-DAO forum, okay, let's deploy there. That did not happen yet. And I insist on the yet because it might change in the future. And I'm open-minded to change that in the future if the actual numbers support the fact that it's profitable for us to go there. But if you look at the DeFi and Solana, where the main market is called Camino, the borrow rates on stablecoins are actually quite bad because most of the people will do like some leverage taking over there with some, or will do some meme coin trading of this kind of stuff. But you don't see happening there the actual core business that generate money on the DeFi landscape, which is use asset as collateral to borrow stablecoins to do directional trading or to not sell your collateral assets and just use the cash to do something else. And that part of the activity is not gaining any significant market share over the Ethereum landscape. It's even regressing. If you look at the growth of the DeFi ecosystem, Ethereum is winning big in terms of growth compared to Solana on this specific aspect of the industry. But you can say that and at the same time recognize that on other part of the industry, they are outperforming largely the Ethereum ecosystem.
Kain, what are your thoughts?
I've also got a lot of thoughts on this. I think like there has been a pattern over the years, right? Where a new network emerges, especially when it comes to smart contracts, right? Ethereum emerged out of the altcoins as a solution to building things, right? You couldn't really build things on anything else. There was like Omni and, a few proto smart contract chains, but nothing was really working. And Ethereum turned up and did the thing. And then Solana came along and, did it in a different way with a different set of trade-offs. And there were a lot of people that were like, oh, it can't work or it won't work, including myself, right? This is not sustainable. It's again, the wrong set of trade-offs. But it did work because people don't all care about like ideological alignment, right? There's a lot of people who just want the best, fastest thing. And particularly in the case of Ethereum, as it got more expensive, Solana became more and more interesting. Same thing with Avalanche, same thing with, BSC and other chains. I think what's going to be really interesting is when this next generation of fast blockchains comes out that is going to challenge Solana by maybe being, more centralized, making more aggressive trade-offs, right? And it's going to be really interesting to see whether those chains can get traction because Solana has been the fast, cheap chain where all the activity has been happening for a long time now, right? And they managed to go through a bear market, which is the key thing that you need to survive as a project in crypto. If you haven't been through a bear market, you're not real, right? And now they've been through that. They've been through, the fire, and they've been tested, and they've come out on the other side. But they're going to have a lot of fast followers that are going, how about, 4 sequencers instead of, 400 or whatever, right? And that's going to be challenging because they're going to be cheaper and faster. And there's a bunch of chains that are coming out that are making, again, different trade-offs, more aggressive trade-offs. There's Monad, there's Fogo, there's Mega ETH, there's a bunch, right? And so I think that competition is going to be quite interesting, and it'll be really funny for me to watch if the competition actually pushes Ethereum and Solana closer together, because now it's like the enemy of my enemy is my friend. If these other chains that are coming out trying to, take them both on, now it's like actually maybe we're more friendly than we thought. We've got more in common than we thought. So I think that this year we'll start to see that play out.
Interesting. I have a slightly different theory, which is something that amused me this past year was watching how both the Bitcoiners and the Solana people seemed to bond. And in that case, it was definitely more like the enemy of my enemy is my friend. And I was like, oh, this is fascinating that they're both shitting on Ethereum, especially because the Bitcoiners are all about decentralization and Solana is actually more centralized than Ethereum. So anyway, it was just amusing. But in a moment, so we're going to talk a little bit more about this centralization versus decentralization aspect. But first, a quick word from the sponsors who make this show possible. The Zeller Development Foundation has launched Build Better, an initiative inviting bold ideas from the Web3 community. No coding or technical experience is needed. Share your vision for better finance, creativity, or access, and see it brought to life in Stellar's next hackathon. Developers will build real-world solutions on Stellar's fast, scalable, and sustainable blockchain. Submit your idea for a chance to win from a $30,000 prize pool. Get involved at betteron.stellar.org. The future of Web3 starts with you. Polkadot is the original and largest Layer 0 blockchain with over 2,000 plus developers. And the anticipated Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem, upgrading the infrastructure with 8 times higher transaction throughput and twice as fast block times, perfectly tailored core time for the needs of every protocol, trustless bridges internally and into Ethereum, Cosmos, Near, Binance Smart Chain, and revised tokenomics and the implementation of a token burn to reduce inflation. Perfect for GameFi and DeFi to build, grow, and scale with one of the most active crypto communities in the space. Polkadot recently announced a partnership with Mythical Games, bringing top games like NFT Rivals with over 650,000 players and 43 million transactions to pave the way for GameFi and the Polkadot ecosystem. Get your Web3 ideas to market fast with economics that work for you. Think big, build bigger with Polkadot. Join the community at polkadot.network/ecosystem/community. Big news for DeFi traders. Robinhood Wallet, Robinhood's non-custodial wallet mobile app, has partnered with Ave-Chan to make access to L2 swaps easier than ever. Enjoy gasless swaps and cross-chain swaps on Ave-Chan and other networks. The best part? Robinhood Wallet takes no fees on same-chain or cross-chain swaps. Other fees may still apply. With gasless swaps, you can pay network fees with the same token you're swapping instead of ETH. Cross-chain swaps make it incredibly simple to swap crypto without any manual bridging. Download the Robinhood Wallet mobile app today on iOS or Android and join people in over 140 countries exploring Web3 with Ave-Chan. Get some of the highest rewards on ETH with the High Growth Vault by Kelp. High Gain leverages blue-chip DeFi strategies with RSETH across Aave, Pendle, Usual, and Elixir, managed by strategy experts UltraYield and Upshift, to get you 20+% APR on ETH, all in a single click. Deposit your assets and receive HGETH, a reward-bearing token that represents your vault position while keeping you liquid in DeFi. Trade or use HGETH on platforms like Pendle, Balancer, and more, while still raking in yields. It's time to get high on rewards with High Gain. Deposit now at www.kelpdao.xyz. We are now featuring quotes from listeners on the show. Here's another comment on the Shaw episode. From his remarks that AI agents could be used to find true trading signal amongst the noise of comments from crypto trading chats. Sergey Golubev responded, quote, "This is a much needed conversation in the crypto space. For too long, traders have been swayed by KOLs and FOMO mentality, rather than focusing on evidence-based decision-making." To have your comment featured, write a review of the podcast overall on Apple Podcasts or Spotify, or leave a comment on the episode on YouTube or X. Back to my conversation with Marc and Kain. So one other bit that I wanted to pick up on in terms of your comments, Kain, was when you talked about the trade-offs around centralization and how Solana has made certain choices and some of the newcomers might choose to do things in a more even centralized way. But I don't know if you saw this over the break. So Lily Liu, the president of the Solana Foundation, came on the show and she basically said that she didn't think Base could compete with Solana in the long term. And she was calling it a corporate L2, saying that it wasn't only parasitic to ETH, but that it was cannibalistic. And she was mocking people who had criticized Solana for not being decentralized because they were now then supporting Base, which is, as she was saying, like less, even less decentralized and, this corporate L2. Do you feel like Ethereum people that support Base are being hypocritical, or do you just see them as those aspects of decentralization or centralization on either of those changes being two different animals?
I think they're very different things, although it's a good talking point. So, points to Lily for using it. I mean, the other thing that I was thinking before is if it weren't for Base, Ethereum would be in a very dark place right now. Like, Base is is really where a lot of the novel activity is happening, right? To Marc's point, DeFi is still happening on L1. It's where all the TVL is, Ethena, things like that. It's all happening on L1. But when you look at like the crazy attention grabbing things, it's really happening on Base.
Yeah, but I do have to say, to my mind, a lot of it is taking stuff that's happening on Solana and importing it over to Base, right?
Yeah, I mean, hey, it's a good playbook. It worked for Solana, right? Like, why not? Why not? And this is the interesting thing, right? Is the Base, the people who are driving Base, Jesse, right, are so much more of pragmatic realists than the people who are driving Ethereum. Right. The people who are driving Ethereum are much more idealistic, right? Much more research focused, decentralization, purity, etc. Base is like a growth team. That's their job, right? Is just growth, and they're just focused on growth.
I think the main difference, Kain, and I think it explained a lot of it, is Ethereum Foundation is operating as a non-profit. The research-oriented non-profit. Coinbase is a fucking company. And I think it changed everything.
Agreed.
Well, so this actually leads pretty much directly to my next question, which is just, I feel like Ethereum is going through sort of a protracted, shall we call it puberty or awkward phase. They obviously had a rough year, and well, actually, I should qualify that. So the price obviously did go up quite a bit. It went up about 2/3. But, both Bitcoin and Sol more than doubled. So I think that was, causing some of the angst in the Ethereum community. But there were just so many negative narratives, like, this question of whether L2s are parasitic to ETH, or as Lily called them, cannibalistic. The ETH ETFs had so little inflows compared to the Bitcoin ones. Obviously, the reaction to Justin Drake's roadmap, the 5-year roadmap, was pretty negative. People really, crypto moves so fast. It makes sense to me that people were shocked that this roadmap was that drawn out. There were other people who had ideas of things that could be done right away. Martin Koppelman had that idea for the native rollups, which would be a lot easier to implement. And then, just in the last several days, there's been this drama over the Week in Ethereum newsletter, which I don't think anybody saw, that would set off just this huge round of hand wringing yet again. But basically, when I watched all of this playing out, I'm wondering, where is Ethereum going? Do you guys still have faith in this modular thesis? And do you have faith that it can accomplish what it needs to accomplish in the time that it needs to accomplish it, as all these competitors are not only coming online, but then, Solana is already taking market share in various aspects of crypto from Ethereum. Where do you think Ethereum's headed?
It's a deep topic. To give a short answer to a deep topic, so it's always with some flows. If you look at Ethereum and you look at the actual economic activity metrics, still winning in terms of liquidity out there, especially the layer 1. And one thing that is very important for me as a businessman is, do people are ready to pay to use your service? And I think that's a good sign of health and a good proxy to see if you build a product that people actually want to use. And the reality is that people are still ready to pay transaction fees to use the Ethereum layer 1, and still ready to make activity on layer 2s when they want to optimize those transaction fees. Ethereum vision was to create multiple role models with a bunch of layer 2s. That's the world-centric approach, and do the scalability through layer 2s. And the Ethereum ecosystem offers a large diversity of layer 2s ecosystem that are all thriving in their own way. Maybe not all thriving, but the ones that have success are thriving in their own way. So if you don't like the Fade chain, the corporate chain, or the centralized chain that Base represent for some people, I do not agree 100% with this vision. Just go to Aave-Chan. And if you don't like Aave-Chan and the DAO decision or Aave-Chan that might seem a bit arbitrary to you, you can go to Polygon. And if you don't like Polygon, you can go to another one and another one and another one. And the good things that we have created on the Ethereum ecosystem is that your experience it will be almost similar on all the chain. You will have different level of liquidity. You will not have 100% of the apps you have on the layer ones. But if you want to trade on Uniswap, you can probably do that in 25 different layer twos right now on the Ethereum ecosystem, and your experience will not be that bad. And so there's been some success on that part. And at the same time, there's been stuff that are lacking, especially when, Laura, you talk about layer 2 being cannibalistic with layer 1. The reality is that most of the activity that is created on the layer 2 do not profit on the layer 1 in terms of the bottom line because of the way the blobs economic work. You will need 100 times or 1,000 times more activity on layer 2 to make a dent on the actual fee space on the layer 1. But if you look at the industry as a whole and the market as a whole, do we really believe that people using the layer 1 stop using that and migrated to layer 2, and it's only a decrease of the economic activity of the layer 1? Or do we believe that layer 2s in general bring a new user base that were not in the Ethereum ecosystem at the beginning? And I think both are true. But if you look at the actual numbers, and if you look at the TVL growth and the actual economic growth of the layer 1, I'm on the side of believing that the whole layer 2 ecosystem is value additive to the Ethereum ecosystem instead of value abstractive.
I think the problem is the tokens, though, right? The fact that every layer 2 except for Base has its own token. If Base had a token, it would probably be net negative for Ethereum, I would say, right? Right now it's net positive, but it would probably flip it because it would fragment the ecosystem even further. And the issue with crypto assets is they're highly reflexive. And so each marginal dollar that you pull out of an asset like Ethereum has an outsized effect on the margins, right? And so, when people come into the ecosystem and they're like, do I buy Arbitrum or, and we had a little bit of this problem in DeFi summer. It's like, do I buy Lend or Haven or, Maker or whatever? But it was not to the same extent. The DeFi protocols at their peak were like, 5% or something like that of the ETH market cap. It was very small. So I think now the total market cap of all of the L2s is like 20% of Ethereum. At least the last time I checked a while ago when the ETH price was a bit lower. It might be better now, but it's a meaningful percentage of the ETH market cap, and I think that just sucks air out of the ETH asset and creates like choice paralysis for a user who likes the Ethereum ecosystem. They don't really know which one to choose. Do I spray and pray, etc.? Whereas in Solana, it's like if you are a Solana person, buy Sol. Like they all know to buy Sol. It's not confusing. There's no, you might buy some other stuff. You might buy meme coins, but like everything's also Sol denominated, which is another thing that people forget about. In the ICO era, everything was denominated in ETH. We didn't have stable coins. There were no stable coins around. We had USDT and it was on Omni. It wasn't on Ethereum, right? If you wanted to buy an ICO, you had to use ETH. And if you want to buy a meme coin, you have to use Sol. So that's a huge, huge difference in terms of like soaking up, Sol for people who want dry powder to buy meme coins. They have to hold some Sol. And so I think there's a lot of different dynamics that are impacting Ethereum price action.
I'm not sure I completely agree with you on this, but if you want to be pessimistic on that chain of thoughts, what do you think of Unichain? Because Uniswap is probably accounting for 20 to 25% of the gas paid on Ethereum, at some point. Obviously, when the activity is larger, it's more diverse in terms of source. And those guys, they just said, well, we're going to do our own layer 2 with 4 blocks per second. And I think the contribution of the Uniswap to the Ethereum ecosystem will be 1% of what it used to be. regardless of the success of Unichain. Because even if they do 10 times more trading of a day, they will not pay 10 times more fee to the Ethereum ecosystem. It will be a fraction of what they are paying right now. And if Aave does an Aave-Chan, and then you have like a compound chain, a morpho chain, a Euler chain, a Unichain, who's going to pay the gas to Ethereum? And who's going to, like, the success of the Ethereum ecosystem actors do not contribute to the infrastructure that generate the success. And that's a very pessimistic chain of thought if you think we are going in that direction.
Well, I mean, Compound Chain was supposed to be on Cosmos. Don't forget, right? They weren't even going to build an L2. The idea, at least my idea, the idea that I believed, the narrative I believed back in the olden days of the launch of L2s was induced demand. This idea that like excess capacity would induce demand. And I think that in a vacuum, it would have. Like if Solana didn't exist and all of the meme coin activity was happening on L2s and not on Solana, I think we'd be in a better place. To your point, maybe it wouldn't make up for like the L1 loss, right? But it could incredibly at some point get there. But at the moment, we're not even close. We have not induced enough demand to fill that gap. We need BlackRock to come and save us or something.
Yeah, I mean, I think the main two metrics that I'm looking at that to me basically really, put a question mark over Ethereum's future is, first of all, so many new users came into crypto through Solana this cycle. Just the Phantom wallet, became one of the most downloaded. I think it actually became the top wallet. And then, the fact that Electric Capital cited that most new devs, or the highest number of new devs, went to Solana over Ethereum. That was the first time since like 2016 or something like that. So those two factors, I think, are quite concerning. I also feel like, in a way, the reason why Base hasn't launched a token and is, basically, just is kind of all in on promoting Ethereum and being part of Ethereum is basically because they don't need to make money the way that the other L2s do. And so Coinbase, they must be like believers in this modular thesis or, be pro Ethereum or whatever. So they're kind of like using all the money that they make from all the other things that they do to promote that ecosystem. I'm sure you've seen on Twitter all these people complaining about the fact that for whatever reason, it takes much longer to withdraw to Solana than it does to Base, which is confusing on multiple levels when you just think about the technology there, right? So I do think that in a way, Coinbase is being some kind of like benevolent actor for Ethereum and not as self-interested as they would, normally for like any other normal L2 actor. And that's really helping Ethereum. But, it's almost like they're actually doing something that's not as good of a business decision for themselves to help Ethereum in a way is, frankly, I don't know. Is that too strong or
No,
would you agree with that?
I think it's maybe even more aggressive than that, right? Like, I think they've inadvertently pigeonholed themselves into the Ethereum ecosystem because remember, it's Coinbase, right? Like, they're a battleship. They're slow moving, right? They made the decision, this decision to build an L2 didn't come over a 2-week period, right? Like at the time that they were making that decision, Superchain was like a glimmer in Jing's eye, right? Like, this is stuff that has kind of happened in very slow motion, right? And so there was a world where like Ethereum L2s were obviously going to dominate. Solana was going to, fall apart. And now we're in this, kind of hybrid SVM, EVM world where like a lot of the activity is happening in an ecosystem that they're not touching. And they're really pot committed to Ethereum now. I don't know exactly how that plays out. I don't think they can unwind that. If they're thinking about doing it's going to take a long time to work through what the implications of that are.
I think it's important to look at the incentive and also the intensity and other structure. And for example, the example of Coinbase having slow withdrawal to Solana, we are talking about like a few minutes instead of a few seconds. But when you look at the incentive of Coinbase, when you have so much money and user money, having a piece of infrastructure and update that to something that is outside your comfort zone, because Coinbase engineers has a lot of experience in the EVM ecosystem over the years because they operate around that for the past few years. And Solana as an ecosystem is much newer. And it's on a completely different technology stack than the EVM ecosystem. So if you have a bunch of Solidity engineer in your engineering staff, then you have no one with trust. So you need to find the talent, and then you need to build new indexer and new ways to do things. And the reality for your business is that who's going to close their Coinbase account if they have to wait 5 minutes instead of 15 seconds? Probably no one. And what's your cost of fucking up the withdrawals and having like $1 billion in the wild because you get hacked? And remember that centralized exchange used to get hacked very often, and the withdrawals and deposits and the bridge part of their activity is probably the most critical piece and where they can easily lose money. So maybe there's no conspiracy. Maybe it's just the infrastructure and the natural inertia of adopting a new technology that is outside your comfort zone as a business. If you look at Coinbase Venture, they are deeply investing in the Ethereum ecosystem, but they are not blind to the other VMs ecosystem. So I don't think there's any conspiracy there. I think it can be easily explained by just Coinbase being a large company that has some inertia.
Yeah, I agree with that. I don't think that, like, to the best of my knowledge, I don't think that Solana withdrawals have slowed down. Like, remember, like, it used to be the case that all withdrawals would take like 5 or 10 minutes, right? They would go through like internal processes. You know, I mean, I've been a Kraken user for a long time, and you know, they're not instantaneous, right? Even on like fast blockchains. So I don't think it's a conspiracy necessarily, but there's no question that there's a reason why Base isn't as slow. Like, they put the resources into making sure Base is as fast as possible and optimizing it, right? They haven't optimized other blockchains. I guarantee you Litecoin takes like 20 minutes to do a withdrawal.
Yeah, but Base is EVM, so they have the tech.
Yeah.
Like, it was nothing for them like to add Base. And they could add every single layer 2. I think if you talk about conspiracy, is that why you cannot withdraw as fast on every layer 2 on Coinbase compared to Base. I think that's part is more the conspiracy side, and I would understand they will play a favorite a bit, and it's just business at the end of the day on that part. But on the Solana part, I'm not convinced there's any ill intent.
Well, and so, you know, Aave is not on Solana, and you talked earlier about your take on sort of the business decisions or the way that you think about, you know, deploying on Ethereum versus Solana as a business person. Are there certain things that if they were to change on Solana that, you know, that would make you reconsider? And if so, what would those be?
More money on there.
Yeah, more money. Yeah. Like, I try to participate as one of the service providers, the Aave-DAO, to increase the Aave-DAO bottom line. That's my focus. So I'm not here to it's not a religion, like it's a business. So if it's interesting for us to go on Solana, we will propose to the DAO to go on Solana as fast as possible. But the reality is that there's never been a point of time in the past, like never, where the Solana TVL was larger than the Aave TVL. It just didn't happen in the past. And when you look at the data, the DeFi and the lending part of Solana is not a good business. We make money, the Aave-DAO, on 3 core business. Leverage taking, so which is direct correlated leverage. So you will take carry trade on between 2 stable coins, and you will earn some premium on the different cost of the between what provides the yield of your collateral compared to the cost of your debt. A very well-known carry trade on that is Ethena. So if you are paid X% on your SUSDE, you are incentivized to borrow some USDC or other stable coins and earn the premium after that. It's very well known as well on LST and ART. If you make 3% on your WSD ETH and borrowing ETH costs you 2.5% on Aave, if you do a 10x leverage on that, you have more money doing that. So that's correlated leverage. There's directional leverage. You have some collateral, you have some Bitcoin, you have some ETH, you borrow some stablecoin because you think the value of your collateral will increase in the future, or you don't want to sell your collateral and use the stablecoin to do something else. And you have also a different kind of activity, but those are the core business. And those core business on the Solana ecosystem are weak in terms of economics perspective for us on the Aave ecosystem. So that's why we're not there yet. But we monitor the market and we are here to make money. And if that change, of course, I will be one of the biggest supporter to have Ethereum Solana.
All right. So I do want to ask a little bit more about what Ethereum's prospects are long term, just because, and you tell me if my assessment here is wrong, but when I sort of look at where Ethereum's headed and the various worries or the different anxieties that I see in the community, I wonder if, this kind of modular thesis, like the infrastructure to build it out is maybe going to take a little bit longer to, resolve the issues of like fragmentation, communication, to create interoperability and to, address this fragmentation of liquidity and other things. So when I look at kind of all the hurdles that they have to get there, and then I see just how Solana, is already just working on so many of those levels, I'm like, okay, so for now, it feels like Solana has the advantage. But as far as I understand it, at least this was kind of my understanding of the modular thesis when I learned about it, is that over a long enough time period, it feels like that would be the more kind of, I don't know how to say it, like maybe more robust or flexible, just adaptable architecture. And would appeal to a wider variety of people because they would be able to tweak, the developers would be able to tweak their products basically more than they might in an environment like Solana. So really for me, the question is just, can Ethereum overcome all those hurdles before too much of its market share gets taken away either by Solana or any of these other L1s that either already exist or that are about to launch? Do you feel like that is the main question? And if so, what do you think is going to happen in that regard?
My take is Ethereum is fine. Like it's
and
directionally
by the way,
fine. Yeah.
Am I wrong? Like both of you, you're both Ethereum people. So we should just get that out of the way.
Yeah. So I used to be an Ethereum maxi, right? But I also used to be a Bitcoin maxi. So, I've been going through a slow motion process, but I've gotten deeply into the Solana ecosystem over the last 18 months, right? I'm building a thing that is chain agnostic. And so I've tried to get into my magnanimous, neutral phase, right? Over the last 18 months. But, I have strong views about both Solana and Ethereum and the different trade-offs and what will work and what won't. What I would say is I think both Solana and Ethereum have made it through the crucible of a bear market in a sense that they're both fine. Like they're both going to be totally fine. I think the interesting thing is that the perception of the success of a project in crypto is so determined by price that when you go through a period where, for whatever reason, structural reasons, just cyclical reasons, price action is not as good as the alternative things, right? Because there is an open market for price action, right? So it's not just like 50% improvement in price or 100% return is good, except when the guy next door is doing a 500% return, right? And then the other person's doing 5,000%, right? Like the relative performance is also important as well. And I think that we saw this last cycle with Bitcoin. Bitcoin went from 20K all-time high to a 50K all-time high, and people were like, Bitcoin's over. This is the most garbage asset ever. Everyone was so frustrated, right? It was only a 2.5x. At 40K, people were like, what is wrong with Bitcoin? This is horrible. The previous cycle, it had gone from 2K to 20K, right? And so I think that there's this view that Ethereum is not doing well, that is solely driven by price action, that is absolutely detached from the reality of Ethereum. It's just the price action. And I think that this cycle, for a bunch of reasons, Ethereum price action has been suppressed, right? And people then post hoc rationalize why it's bad. They start looking for the narratives as to why it's bad because the price action's been bad. I think if the price action had been good for some other independent, non-fundamental reason, to get back to fundamentals, right, that people would be doing the exact opposite and confabulating all of these reasons why Ethereum is amazing and it's the best because of X and Y and Z. And so I just think it's like very determined by price action, and price action for Ethereum this cycle has been bad. Maybe next cycle it's going to go from 5K to 100K. Who knows?
So you're not worried about this like 5-year roadmap and all the things that could happen before?
The 5-year roadmap is insanity. I think that I was there. I literally was running across the DevCon conference center to get there because I was so excited. I was like, I hadn't been excited to go to a talk. I was like, finally someone gets it and they're going to propose a sensible, tangible, short-term solution to some of these problems. And then it was like in 2030, and I was like, I'm out. This is not the thing, right? We already have a long-term roadmap for Ethereum. That's the irony, I think the thing,
and it's a very good one, and they are making progress.
It's a good roadmap. It's a good roadmap. So if you're going to propose an alternative, it has to be good on a different dimension, right? It's not going to be technically better, right? Justin's proposal was technically different. It's not technically better, but it's also equally long, right? You need to have some spice in there. Do it in 6 weeks or something, right? That would have been interesting. That's why I think Martin's idea of canonical L2s and I jokingly said Vitalik should offer to buy back all of the L2 tokens. That would have an impact on price action, right? Just ban L2 tokens and reabsorb them into Ethereum.
I think we can go deeper the rabbit hole. I think LST should not exist. Lido, I love Lido, and I use Lido, and Lido is a huge part of the Aave ecosystem. But why Lido exists? In the sense that it should be native to the protocol. You should be able, when you stake 32 ETH, to be issued 32 stake ETH directly without any intermediary, because it doesn't make sense that you don't do that. And I think they had a veritable lack of foresight of all the protocol should be used, because I think there's a segregation and a deep gap between the people that builds the Ethereum as an infrastructure and the people that build on top of Ethereum on the application layer. And I think that divide has created more and more frustration over the years, where you have the builders on top of the infrastructure that basically don't talk anymore and have some, as you say, angst, Laura, at the beginning of this podcast, toward the builder of the infrastructure. And I don't think that's a very healthy relationship. The fact that everybody agrees on the application side that the Ethereum Foundation is doing a terrible job. The founder of every single major application building on top of the EVM ecosystem agree that EF is doing a terrible job. And that's not healthy. So where do we go from there?
Well, a couple of things came to mind when you were saying all that. One is that after EigenLayer was, I can't remember what stage it was at, but basically it was just captivating people's minds at the very least, if not maybe already launched. I forget where it was, but the point is that Vitalik wrote this blog post saying, when would we incorporate certain things into Ethereum itself? And I thought that it was leading to some announcement like that, and then nothing happened. So maybe he was just doing some kind of abstract theoretical, essay writing, basically. But it does feel like, and actually why don't we now talk about the weekend Ethereum thing, because this is really what sparked a lot of criticism of the foundation, and it really does call into question, like, what does the foundation what is the purpose of the foundation? Why does it exist? What should it be doing? So just to give listeners a little bit of the backstory, basically on New Year's Day, Evan Van Ness, the creator of the Weekend Ethereum newsletter, published a post saying that the Weekend Ethereum was ending because the newsletter, I guess, had been receiving a modicum of support from the Ethereum Foundation, but that the foundation had decided not to continue that support, even though Evan claimed he had told them that if they did so, he would immediately terminate the newsletter. So this set off a firestorm. People were criticizing the Ethereum Foundation, lamenting the shutdown of Weekend Ethereum. But then a couple of days later, Josh Stark of the Ethereum Foundation replied to Evan on X saying that actually his funding was for him to advise on their grants program, not for Weekend Ethereum. And that back when I guess they had informed him they were going to cut off the funding for that advising work, he had said he would immediately end Weekend Ethereum rather than look for a buyer or try to wind it down in an orderly fashion. So they kind of had this little back and forth. And during that period, Evan accused the Ethereum Foundation and Josh of being opaque about the 8-figure grants the EF has been making. And this basically escalated into a much wider ranging discussion about the Ethereum Foundation overall. People were criticizing the EF's X account for not having made an original tweet as opposed to a retweet since April of 2022, which that was crazy. April 2022 was like before the Terra Luna collapse. So it's been a while.
After that, they're like, all right, we're never tweeting again. After they shilled Terra Luna, right? They were like, okay, we're shutting the account down.
To give context, I discussed a bit with insider inside the Ethereum Foundation in the past few days, and even we have a relationship over the past few years. There's a deep PTSD of the complete hostility of some government, especially the US one, towards decentralized platform and decentralized infrastructure like Ethereum. And right now, they don't feel they have the capacity to do much. And I think that's a problem because the times are changed, and I think we are reaching a paradigm shift of what you can and what you cannot do. And when you look at the market and the industry, and you see other actors like similar actors and similar infrastructure and what they do, my chain of thought is that if they can do that, maybe we can do 10 or 20% of what they do and be completely fine with it. But the current leadership of the Ethereum Foundation, and I think that's a problem, is very conservative of their ability to do or do not as specific things. And I think that has friction to their impact in the ecosystem.
I've talked about this quite a bit, but the point for me where I was like, the Ethereum Foundation has jumped the shark, right, was when I had joined, and there was this post that was like, our new philosophy is this philosophy of subtraction. And it's grooming a flower by removing the thing to make it more beautiful. And I was just like, honestly, get the fuck out. Please, this is not how you run a thing. Only an insane person would think that that was a reasonable approach, right? And when that is the message that's being sent out broadly, right, that hey, we are going to do less to make room for the garden to grow. No, the garden was fine. People were doing stuff. Everyone was working hard in the garden. Get in the garden and also do some stuff, right? It just was the wrong message to send. And I think to Marc's point, okay, yes, we've had this chilling effect from regulators that have been adversarial, but there's plenty of people who are out there who are still doing stuff, right? There's plenty of people that are taking risks in the Ethereum community. It's not everyone said, okay, let's be risk off, right? The EF of anyone should be willing to take some risks. They've got the resources to defend themselves. you've got, small startups out there, YOLO, trying to win. And the EF is like, oh, whoa, no, we don't want to do anything too crazy, like tweet. It's madness, right? And so I think that like there needs to be a shift from a leadership perspective of, hey, we're actually going to come out and we're going to do things and we're going to advocate for Ethereum. And Vitalik has started doing this, right? Like he got the message. There's a bunch of people that have been agitating, including myself. And I think he got the message. He got the message in terms of like engaging with DeFi. He got the message in terms of, going out there and being more supportive of ETH. And I think to Marc's point, like we're in an environment now where it's shifted, but I still don't think that justifies the last 4 years, right? Like, yes, it was an adversarial environment, but people were out there taking risks. The EF should be out there taking risks. Of all the people that can afford to take risks, they can afford to take risks.
I will be more blunt at that, and I will probably make some enemies, but you know me, I'm Chainsaw Zeller, so it's fine by me. I have nothing good to say about Miyaguchi leadership of the Ethereum Foundation. When I started my involvement in the Ethereum ecosystem, the leader of the Ethereum Foundation was Aave-Chan. And she was not a perfect person. She had her own flow, and I don't want to go back that deep in the past because a decade ago it doesn't make sense.
If people are interested, you guys should read my book because that's a big storyline in there. But anyway.
But what I will say is that Aave-Chan was a business-oriented person. And I think Miyaguchi is a non-profit research-oriented person. And I think what we need at that stage of Ethereum is to be more, a bit less on that pure research and ivory tower side of things. And that's what I say about it. And I think it's the right time right now to change the leadership of the Ethereum Foundation and to have a new directionality of how we manage things.
Huh. So there are a couple of remarks I want to make. First is that, this fear that the Ethereum Foundation or Vitalik really had about regulators. I mean, it's baked in from the very beginning. Like when you read my book, like even just in that fundraising period, like before the crowd sale, it was just like a huge thing for them. They were very nervous. And I think you're right that that really hung over them in a big way. And it's now almost been baked into how they operate. And so the fact that, even after the Ethereum ETFs were approved in the US, that they didn't like change their tack, I think really says something about how they just have that so ingrained in how they operate that they like can't even think outside of that. It's like when, you have like a dog or something that has like an electric fence. And then once it learns that it can't go beyond that. Like even then once you take the electric fence away, it will never, go beyond that. And it's sort of like what the EF, I think, is like at this moment. But I also just wanted to say, like in terms of other projects doing things, like Solana is a great example because obviously Solana was named as a security by the SEC and, they're obviously doing fine and things are going to change in a big way.
Not a security, but like, like if that's the worst thing that they can do to you, like, everything was a security according to Gensler, right? So
exactly,
like if you're going to play defense because you've got a crackhead running the SEC, then like that's a bad choice, right? Like, and this is the thing that I think like, I've said this a lot, but there was a moment in time a couple of years ago where shifted from we have well-meaning people that are trying to work hard for efficient, fair markets, and we just need to educate them why DeFi is better, to these people are trying to kill us and we need to kill them back. And guess what we did? We actually did. They're dead. Like some of them are dying, some of them are already dead, but like we've actually just cleaned them out, right? And that was the shift that needed to happen. But where was the EF in that? Like,
yeah, they
put
were nowhere.
The flower pruning thing down and pick up a gun and shoot someone. Like, seriously, like we're in a war. Like this is a war and we're trying to survive and you're not supporting. Like this is not helpful, right? So I just think like we need a wartime CEO in the EF. That's what needs to happen. Not someone who's trying to, subtract or whatever the hell they're doing.
Yeah, Kain, it's quite poetic because Ikebana was used to be an art done by samurais. So maybe it's time to drop the flowers and take the sword.
Yeah, pick up the sword. Exactly.
So, Marc, you made a proposal on X. Can you discuss that here and elaborate on why you had those ideas?
Yeah, I think the whole idea, obviously, if you want to generate engagement and spark some public discourse on the topic, you have to be provocative. So my proposition on X was to fire all leadership position and do 80% headcount reduction on the soft skill roles of the EF. Because I do believe that on the dev side of things, to be fair, the Ethereum Foundation is crushing it. Like, we got the merge. That was a massive success. We have 5 different consensus and execution client, which is unprecedented in the blockchain ecosystem, that are operating in sync. And we do that has infinite complexity to do upgrades, and we still do them on a regular basis. We have done upgrade on many things on the infrastructure side of things. So there's good parts of the Ethereum Foundation. I think on the research development side, they are crushing it. But on the soft skills part, they are just absolutely terrible. And I think there is a mindset issue on the Ethereum Foundation. So we need to spark a new paradigm. And a good way to do that usually is to do a shock therapy, is to purge the Ethereum Foundation from the actor of the old mindset and introduce new actor with a new mindset, and to change the directionality of the Ethereum Foundation. Because when you look at the numbers, the Ethereum Foundation is actually doing okay in terms of finance. Like, the budget is $130 million last time I checked, somewhere in that area. I think we can have that and have as much impact on the development side. And instead of spending on clueless initiatives that are do good, social good, whatever, but low impact on actual bottom line of the ecosystem in terms of growth, we can have a $50-60 million yearly budget Ethereum Foundation that is crushing it compared to everybody else in the ecosystem.
All right. Well, yeah. So these are obviously pretty spicy suggestions. We'll have to see. Like, honestly, I'm not sure if the foundation will do anything, because they just have a tendency to not do anything. But the last thing that I wanted to call out was a tweet where somebody, 0x Mawuko, basically said that a lot of this drama is the result, quote, of not having governance protocols for Ethereum. So do you feel like Ethereum would, not be having this sort of identity crisis right now, or this
nightmare? It would be an absolute nightmare. Oh my God. Like, if we had the type of governance that we have in DeFi for the EF, just kill me now. Like, no. Please.
One thing that is important to remind everybody, there's governance on the Ethereum infrastructure.
There is. The rough consensus governance structure is very, very robust and resistant to capture, and it works. Like, please, like, I remember vividly when there was the proposal to create the dev fund and we're going to siphon off, like, that would have been the worst possible thing you could do for Ethereum, is to create a honeypot for people to start trying to grift from. At least the one thing you can say for the EF is it is very opaque. It's hard to break in. Some people have cracked the code and been able to grift their way into it. But it's hard. It's not an easy thing. It's very insular. That's, I think, a feature and not a bug. So in that respect, I think the Ethereum Foundation is somewhat impregnable. You can't really get in there and grift them as easily as you can other foundations.
But as a protocol itself, every upgrade of the protocol is opt-in. So you have, as a staker, to update your clients on the execution and the consensus side to accept the change. And sometimes, not every time, but sometimes it's a bit controversial, and that leads to discussion. And what the EF need to remember is know that we have the LST, because they allowed that to happen, and that we have the LRT, and we have the DeFi ecosystem, and we have the stablecoins that are so large. There's been a lot of article about that in the past few years, is that at some point, if something really pisses off Lido or Aave or Compound or a big protocol, there's the means to say to the EF, well, that's not going to happen. And That did not happen in the past, but I do expect that in the future we'll have like some staker militancies and activism, because you have a graffiti field when you actually produce some block to pass a message to the community. And at some point, like in the past few weeks, someone suggested, well, we just should put a message where the ETH must change or this kind of stuff. It did not amount to anything at the end, but I think it might happen in the future. And the reality of Ethereum is that if Circle doesn't want to do an upgrade, what you gonna do? And if Aave doesn't want to do an upgrade, what you gonna do? Maybe you can do the upgrade anyway, but that will lead to an hard fork and so much consequence in the ecosystem that might create a lot of problem down the line. So I'm not saying it's like Circle control Ethereum or Aave control Ethereum. That would be like crazy to say. But what I'm saying is that there's some form of soft governance or tacit governance that exists in the Ethereum ecosystem, where you need some form of alignment to the big ecosystem actors on the application side of things, and infrastructure cannot be blind and deaf completely to what happened to people building on top of them.
And what do you guys think about, the kind of Justin Drake proposal and the Martin Koppelman one that we discussed, the native rollups? Like, do you, does it seem like there's a decision being made either way? Like, is Justin's just going through because of his position? Because it seemed like a lot of people were excited about Martin's idea, which would be kind of quicker and easier. But
I don't think it's tenable. Like, it's a fun meme, but I just don't think it's tenable. I think like that ship sailed a long time ago. I mean, it would take so much coordination, and there's so much money at stake, billions and billions of dollars at stake in L2 tokens, rugging them, even if you let them exist, as like some second class citizen to these canonical L2s. I don't think we have the mechanism for implementing something like that, unfortunately.
And I don't think that's something you actually want. As I said earlier in the podcast, Lido should not exist. In the sense that I believe it should have been native. But Lido do exist. And I think it makes sense that as Lido do exist, that we do not try to hurt Lido unnecessarily. Because at the end of the day, when you have an industry that developed, and as an infrastructure, if you start rugging the people that contributed to your success, that's saying the very clear message to everybody that might think about building on top of Ethereum is that, if Ethereum Foundation doesn't like me, they're going to kill my industry as a whole. And I rather build on another infrastructure. Like, you cannot do that, obviously.
Interesting.
But so if you think about this though, right? Like, I know I said you can't do it, but if you had a gun to your head and someone was like, get rid of the L2s, the only approach that you could offer.
Oh, but really, my understanding, I didn't think Martin was saying to get rid of the L2s. I thought he was saying to add additional L2s that are native to Ethereum.
But I think that's actually a compromise that's a bad compromise, right? Like, if you're like to Mark's point, if we should get rid of Lido, we should get rid of Arbitrum and Optimism, right? We should have canonical L2s that run on ETH, that consume ETH, that don't create this fragmentation and choice paralysis of like, which token do I buy if I'm aligned with the Ethereum ecosystem. So you could, in theory, make a proposal that says we are going to put ETH inflation, some amount of ETH inflation, into each of these bridges and basically lock up all the tokens and burn them, and buy them back at 50 cents on the dollar or something like that, right? Especially for the locked escrow tokens. There's whatever it is, 50% of Arbitrum's not circulating, and same thing for Optimism or something like that, right? And you offer to buy back all the tokens with like ETH inflation. You could do that. It's like in theory possible. Could you pull it off? Like, is there enough consensus to pull it off? I don't think so. Maybe a good EF could pull it off if they had the power. Vitalik could probably pull it off. If Vitalik proposed it, it would probably work.
Like, listening to you, it does make me think, I feel like this is how a lot of big titans of corporate titans of years past have gotten disrupted. where they didn't want to kind of change how they were doing things. So it's almost like this question of, should Ethereum make Lido and Eigenlayer and layer twos like, part of the base layer or incorporate into Ethereum itself? Like maybe that's what's needed to disrupt themselves to make sure that they maintain their leader position. Like, I don't know.
Yeah, but Laura, where do you draw the line? Because if you say that, why Uniswap should not be native? Why Aave should not be native? Why the stable coins like Sky should not be native?
Then you become
you
a
verticalize everything,
chain, which is
exactly
really not that far away from.
Yeah, then it's like Meta. It's like the centralized companies just acquiring more. Yeah, I know, but I'm just saying that. The way that you were expressing it, I thought, oh, I feel like I've heard this story before, but
I think you're right. I think there's also, talking about Meta, platform risk, right? Zynga, like the lesson of platform risk runs through all of startup land, right? This idea that you go onto someone's platform, they say, hey, come and build on my amazing system. I've got all these users, I've got distribution, I'm going to do rev share with you, I'm going to do all this cool stuff. And you go, amazing. And then you build this cool game. And then they go, that's mine. And you're like, but no, I built that. And they're like, no, that's mine. And then they just either clone it or buy it or take it or, put a gun to your head and say, give it to me or else, right? And I think if Ethereum were to do that now and rug all the L2s and say, and again, it wouldn't be a rug if they offered to buy them, right? But if they said, we're going to shut you down if you don't sell your technology to us, right? It would be a very chilling effect for whatever the next technology evolution is. And in reality, the market forces that allowed Starkware, Optimism, Arbitrum to compete and give us this very vibrant L2 ecosystem that we have, if the EF had been in charge of delivering that, it would have taken a lot longer. I think they would still get there because, to Mark's point, like they have amazing researchers, right? But market forces are always more powerful. So if you have this centrally planned economy that's all run by the EF researchers, I don't think you have as a robust a platform as we have today. And so it's a harsh trade-off, but I think it's a trade-off that's worth making.
Yeah,
it's funny where we do a podcast about all communism is bad. Like I think we already agreed on that.
One other question I just had to ask you guys about was the fact that there is a lot of criticism that Ethena is actually the reason that the Ethereum price has been a little bit depressed this year. Ethena famously is based on this delta neutral hedging position or hedging strategy that partially requires the shorting of ETH. And so I have seen this narrative that is the reason that the price of ETH has been depressed, especially in terms of the ETH BTC ratio. And I wondered what you thought of that theory.
I think it's nonsense, but I understand where it comes from, right? So in the original Ethena proposal, the proposal was, and this was like the original implementation, you turn up and you give ETH to the protocol, and it then takes that long ETH, spot ETH position, and then matches it to a short ETH position and generates the stable coin. But I was always a little bit confused about that because I was like, you lose your exposure to ETH. Who is the counterparty that wants to do that trade? You're making it really inefficient because if I have stables that I want yield on, now I got to go and swap the stables into ETH to provide to you. Ethena worked this out without even telling anyone, to the best of my knowledge, right? And because remember, there's like a permissioned cohort of people that can mint SUSD E, right? USDE and SUSDE. And so they worked out, like, I think a few months in, that it was really dumb to have people provide staked ETH. And they just said, give us your stable coins and we'll do it for you. And so people then started turning up with stable coins, and then they go and buy spot ETH, pushing up the price, you could argue, right? Like by this logic, they're just as much pushing up the prices as suppressing it. And then you short the perp, right? So you end up being delta neutral, and ideally, there's nothing there. And there's an argument for, like, by doing this process, what it actually does is keeps the funding rates low, which then induces demand for people to go longer ETH, right? If funding rates were higher, all things being equal, people would be less long ETH because the funding costs would be much higher. And so the marginal buyer of long ETH positions is bigger in theory because the funding rate is suppressed or compressed, you could say, by this carry trade. And it's all people just looking for yield on their stables that were otherwise just sitting there idle. So like, this is a nonsense argument, but I get how you could get yourself there.
One thing that I think I agree with you 100% on this analysis. One thing that I want to remind people that are listening to us is that every short needs to be closed at some point. So when you short, it's a sell that with a guaranteed buy at the end of the day, be it as profit or at a loss. Because when you open a short position, you have to close it. You cannot open it forever. So what they do effectively and factually is that they turn stablecoin into buying some ETH, and they actually buy it, and then they open a sell position that they have to close at some point, so they have to buy ETH again to close the position. So the whole argument and everything else that Kain said is completely on point, but the whole argument doesn't make sense to me as well.
Okay, and just to call this out specifically, I did send you guys both a tweet thread by Ben Lilly where he did an analysis, and he was saying that when money flows into Ethena, actually the Ether price does get a little bit depressed, in that when outflows happen from Ethena, that the price, at least relative to Bitcoin, goes up. But you feel like it doesn't matter that just...
I looked at the thread. I don't see the relationship. Like the underlying relationship. Even the assumption in that thread was that people are providing ETH, right? And that then, it's like net long ETH is being married, but it's actually not what's happening. And the other thing is that 67%, which again, you could argue that Ethena is not communicating as well, because even as an Ethena maxi, I didn't know this, but 70% of the open interest is Bitcoin denominated now, which kind of blew my mind. I thought it was 0%. So I was really surprised to see that.
The really important thing to remind people that are listening to us is in data, it's very it's a bad path to try to force correlation between things that you observe in the data. And one simple explanation is that how do Ethena make money on their short? They make money when a majority of the open interest is long on the market. And that happens when the price goes up. And that happens because on the bear market, it's very simple. One side pays for the other side. So they make money because short are paid by longs, because there's more longs than short in that market configuration. So yes, when there's more volume in Ethena, that means that people are more long. So the value of Ethereum is expanding. And when there's less money in Ethereum, maybe the value of Ethereum is contracting. But it's really important to understand that markets are complex systems, and you cannot force correlation to data just because it serves your narrative.
Yeah, there's a correlation there for sure. It's just it's not causation, right?
Causation. It's Sorry for my bad English. You're right about this one.
Oh, good.
All right. Well, the last question that I want to ask is, again, kind of looking forward into 2025. This year, the Solana Seeker, which is the new upgraded version of the original Solana Saga phone, is going to come out. And I wondered what your thoughts were about that. Basically, I feel like one of the main hurdles that crypto has yet to unlock is the fact that these major phone makers are essentially gatekeepers, and Apple and Google, they take a hefty cut out of purchases on the apps in their app store. And so, they have not been friendly to decentralized applications or to crypto generally. And it sort of seems like, for the time that those phone makers remain dominant, that the crypto industry is going to, have a bit of a more challenging time. And I wondered, do you feel like the Solana Seeker is going to help the crypto industry gain a toehold, or how do you feel like this last, or I don't know about last, but this next major hurdle is going to fall?
I think operating in that area is adding on top of the incredibly challenging industry, managing another incredibly challenging industry, which is hardware, and more especially phone hardware. What I remember about like the first Saga phone is that the MKBHD, which is like the largest YouTube reviewer of tech, said it was like the worst phone he ever had to review. And I think a large part of the success of the Saga is that they forced like a lot of airdrops. So if you bought the phone, you made like tens of thousands of dollars through airdrops, but that's a bit of a one-trick pony. And the V2 to be a success, we cannot rely on are we going to airdrop things, because at the end of the day, it doesn't work. We learned that during the DeFi summer of 2020, is that if you print tokens of the Ethena and you say, oh, that's real money, well, people will usually prefer to have some USDC or some ETH, some SOL, instead of those magic internet tokens you distribute out of thin air. So it's an incredibly complex, challenging, and industry. And we are not very mature on the crypto side of things, but I think there's a lot of ambition, to say the least, to think they can make a dent in the hardware side of things.
Yeah, I think I agree with Marc, and like one of the challenges is there's a selection bias, right? Like the people buying the phone already have crypto. It's not really making a dent in the App Store monopolies, right? The Play Store monopoly. So you have two duopolists who are operating these app distribution platforms, which have now become payment platforms as well, payment distribution platforms. And their model assumes like zero marginal cost sales, that you're selling software, right? Like it's just not conducive to selling money. You can't charge 30% to sell someone money. Like that doesn't work, right? So I think that the only thing that solves this is demand. Sufficient demand from the user base of those things. And I think that it'll happen when it happens, and it'll be a tipping point. And then you will have like, hardware enclaves where you can store, private keys and things like that on an iPhone one day, and they'll roll out a whole crypto thing and partner with Coinbase, like Apple, loves to do. Find a partner that they can get on stage at the iPhone release and talk about all the cool stuff that they're going to do. Something like that will happen, but it'll only happen from consumer demand to force them to change.
I agree with you, Kain, and I think like the disruption will come from the hardware to crypto instead of the other way around. Because if I have an actual secure element in this, and I have the same security than a ledger, hardware wallet or Trezor in this device I already buy every couple of years, why do I need this? I will stop buying this immediately. I will use just my iPhone. And that's the reality, is that I believe there's more chance in the next 3 to 5 years of Apple having secure element, that they already have that for eSIM and data link and your Face ID. So they have a lot of experience in that area. So for them, and they have the cash to develop that if they think it's a good business for them, then Ledger or Solana disrupting the Apple business.
I actually think that passkeys will be a Trojan horse here. Because you will soon be able to store arbitrary data in passkeys, and we already have secure enclaves for passkeys in Apple devices with the latest iOS. So I think we'll see this converge faster than people are predicting, but it doesn't solve the payment monopoly, right? This 30% cut in the App Store, that's a different problem. It'll just require PWAs, and there'll be a sufficient demand that they'll go, we can make more money by taking a 1% cut of all crypto transactions and have crypto transactions than try to take a 30% cut and only get scams or whatever.
And that's going to work. And I think that's good business to do that, because people will pay a convenience tax happily usually. If you look at MetaMask Swap, the fee is atrocious compared to what you can do using like 1ETH or something like that. And yet they make millions. It's the same thing for other platforms. Sorry about that word.
And just to understand what you were saying, Kain, when you said that the passkeys could be a Trojan horse, are you saying that essentially that would turn your phone into a sort of hardware wallet? And so then you could send transactions on chain without them needing to go through... without them needing to, I guess Wait, is there a
And
way
that's-
You'll be able to via a browser, right, via Safari, interact with the DeFi app without having like a browser wallet or a plugin or an external hardware Bluetooth device or something like that. It doesn't solve the App Store problem.
Okay.
You'll be able to store passkeys in Apple Password Manager that have private keys embedded in them that will allow you to interact inside of apps and sign messages, sign transactions. But that doesn't stop the actual distribution problem of the app needs to get through the App Store. And if the app is selling digital goods, NFTs. Now, if you're selling NFTs, yeah, fine, give Apple 30%, no problem, because there is zero marginal cost for you to do that, right? But if you're Aave, that doesn't work.
Yeah, that's
Right.
I think Apple will evolve on that if that's a good enough business for them. And,
Correct. They just need to be consumer demand for it.
and people don't realize how easy it is through everything you said. And also, that's where the industry as a whole is going towards. When you look at the FIDO2 standards that is getting adopted, I'm sure you have more and more passkeys in your account because it's getting adopted across the whole Web 2, and people want to get rid of the whole user identification password system to go through passkeys. And also the industry is evolving toward that path with more and more emphasis on account abstraction and smart accounts and smart wallets that can be powered by this kind of stuff. So I think the real question is, what have the change of being a significant actor in the hardware part of the industry when the hardware part of the industry has a so seamless path toward disturbing you as an actor.
All right. So last quick question before we close out. This is like one of the longest recordings I've ever done, but obviously this is the first big show of 2025. So I was wondering if you would want to leave us with one prediction for the year for crypto.
You want a good one or a bad one? Optimistic or pessimistic?
Whichever.
I
or
can
if
do
you
both.
have more than one, you can, go ahead.
I can do both, and I'm sure of that. 2025 will be extremely a year where there's going to be a market expansion in terms of adoption, in terms of price action, in terms of innovation, in terms of all these kind of things. But I think there's also a very high chance that 2025 will be the start of the market shift toward a new bear market. I hope it will be later in this year, but I think there's a very high chance we shift the market dynamic to something that is more flat or downturn during the year 2025. So it's going to be a great year, but probably at some point of the year, we're going to change the paradigm in terms of the actuality of the market.
Okay, Kain.
For me, this is a bit self-serving, but I think that we're going to see a proliferation of applications that are on-chain that offer the same user experience and utility that we have from existing centralized platforms. And I think it'll be the year that we shift away from the majority of activity happens inside of centralized platforms. The majority of crypto transactions happen on Binance, on Coinbase, et cetera. And we shift out into the majority of transactions happen on chain in open on-chain platforms.
Huh. Interesting.
It'll be the tipping point. That's like some point this year it'll shift.
All data metrics lead to that conclusion. And if you look at it, there's more and more on-chain trading, more and more on-chain lending, or more and more on-chain investment and all this kind of stuff. And I do agree with you. That's the tipping point.
Okay, great. Well, where can people learn more about each of you and your work?
To me, it's very simple. Just use Aave, and you can go on the Aave Governance Forum. You will see a lot of long posts from me. And if you want something that is more funny, I guess, you can find me on social media through the account Lemmisgate and the Aave-Chan account.
You can find me on X, Kain, Kain, and you can also follow Infinex, which is project that I founded. So both of those are two ways to follow what's going on.
Perfect. Well, this has been a marathon show. Thank you both so much for coming on Unchained.
Thank you so much for inviting us, Laura.
Yeah, thanks for having us.
Thanks so much for joining us today to learn more about Kain, Marc, Ethereum drama, and the upcoming year of 2025. Check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Juan Aranovich, Megan Gabus, Pam Majumdar, and Mark Akuria. Thanks for listening.